Hi friends, Tata Tech's IPO is coming up very soon and the million dollar question is this IPO a big hype? Or Tata Tech stock can actually become a multi-bagger stock in the upcoming years. We are going to understand 9 to 10 simple points that I've extracted from their 500 plus pages of RHP document. So you are not going to find this content elsewhere. With that, let us get this video started. Point number one is, where is Tata Tech actually earning money from? We need to understand that, and also whether it's an IT company or not, also we need to understand. So if you go to page number 192 of their RHP, you will see that their 78% revenues are coming from the service segment and close to 21% of their revenues are coming from software or technology solution segment. Also, if we head to their page number 179, you will see that Tata Technologies 88% revenues are coming from automotive sector. These two are extremely important points that we are going to use throughout this video. But let us now take examples of what does this service segment actually means, what does this software segment actually mean, so that we really understand the business model of this company. And also, if it is an IT company, then the question is, why would I not invest in TCS or Infosys that are the big IT companies in India? Why would I consider investing in IPO of Tata Tech, which is only generating 21% of their revenues from IT? So from a revenues perspective, 21% of their revenues makes this company IT company, but 78% of the revenues coming from non-IT sector makes this company non-IT company. It's a very, very beautiful amalgamation of IT plus non-IT that people miss out on. Let us look at two quick examples of what is this service segment and what is this technology software segment. So if you go to Tata Technologies website, you will find the success stories of their work that they have done for many of their clients. For the software example, I would like to talk about that they have done over-the-air update architecture for one of their Southeast Asian car manufacturer. Over-the-air architecture simply means that you can send a lot of software updates to a car using Wi-Fi. Just to break it down, before a car is actually delivered to customer, there are a lot of software updates that are done to the car, and using a central server, company can send a lot of updates to the car software. Also, after the car is delivered to customer, there are continuous updates that need to happen to the software of the car, and using that central server, the company can send those updates to the car using this over-the-air architecture. So this is one example of the software that these guys developed. They also have developed a lot of products for automotive sector that you can see on their website. But let us now come to the services sector example. So if you go to their website, you will see one of the success story. And for one of the Swedish automotive business, what they have done is they have done the full ownership. The important word is full ownership of vehicle engineering, design, development, including system integration and network validation. Simply meaning that they have designed a car for a Swedish manufacturer, and that goes much beyond than the softwares only. It is the entire design of how the car will be manufactured commercially in the production. With these two examples, I hope you understand the business model is that they are actually designing the cars, and 78% of their business is coming from designing the cars, and 21% of their revenues are coming from delivering softwares to the automotive sector. So in summary, this company is a global engineering and services company, not a IT company, not a pure IT company, I should say. And also the company operates in the automotive industry mainly with a deep domain expertise. That is what we need to understand here. And to be honest, I would not have kept the name of the company as Tata Technologies because it is a misnomer. Rather than Tata Technologies, the company should have been named as something like Tata Automotive Engineering and Design Services, which will make more sense given the fact that close to 80% of their revenues are coming from design and services that they provide into the automotive sector. Having said that, let's move to point number 2 in terms of why this company is coming up with the IPO. Let us understand that very quickly. For that, if you go to page number 124, the company has stated 3 main reasons for this IPO. Number 1 is that they want to achieve the benefits of listing the equity shares on the stock exchange. So whenever a company gets listed on the stock exchange, there are a bunch of benefits they generally get, such as that they have access to the capital. Whenever they want extra capital, they can raise it through the market later on. Also, the stocks, they carry the collateral value. Whenever company wants to raise more money using debt instrument, they can actually keep these stocks as the guarantee or the security, and they can take loan against it. So there are other bunch bunch of benefits also that the companies get, but all in all, they want to get listed because getting listed will give them some benefits in the long run. Point number 2 is that their promoters want to do offer for sales, mainly offloading their shares and booking some profits. That is what many companies do in terms of booking the profits from promoters' perspective. So in this case, they want to do that and they want to offload close to 60 million equity shares. Point number 3 is that by getting listed, the company wants to improve their visibility and the brand image, because a listed company carries a better reputation in the market versus a non-listed company, because by simply getting listed, it increases your reputation because there are a lot of regulations that you will have to adhere by. So all in all, these are the 3 reasons that the company has given. My take on these 3 reasons is that none of the money that we are going to invest in this company, if we decide to, is going into company's growth, which generally I do not like. Personally, I do not like pure play offer for sales, but that is only one criteria. Let us go ahead and understand other points in terms of whether this company has the key strength, weakness, and so on. Let us move to point number 3, which is what is so special about this company? What is the key strength, core strength of this company? So if you go to page number 38, you will see that year ended 2023, close to 60% of their revenues are coming from top 5 clients. Now, many people will say that this is a concentration risk, that their 60% revenues are coming from 5 clients. And if tomorrow something were to happen to those 5 clients, then the company is doomed. I see that as a biggest strength for this company, because if you look at the names of these clients, you will see page number 37. Top 3 clients out of those 5 are Jaguar Land Rover Automotive, number 2 is Tata Motors, and number 3 is VinFast. Now out of these 3, JLR and Tata Motors, they are actually Tata Group's company. They are only going to give the business to Tata Technologies. Who else, right? More importantly, if we see page number 173, you will see something very, very special in terms of the future growth. Tata Motors, for example, has committed to spend 1.8 billion US dollars between 2022 and 2027 in the EV segment. Extremely important point from the future growth perspective. Point number 2, JLR plan to invest annually $3.5 billion in order to take all the Jaguars and 60% of Land Rovers electric by 2030. So there is a substantial investment that is going to happen from Tata Motors as well as JLR in the next 5 to 7 years, and therefore the company is less relying on other clients to come and give the business. There is a lot of predictability when it comes to the revenue growth, when it comes to the profitability growth for this company, and to me that is like business sealed already, and this is biggest key strength of this company versus companies like KPIT that I'll talk about in the upcoming few minutes. But I hope this point is very clear to you that this company, this is their business mode, this is their USP right now, that the 60% of their revenues are coming from the top 5 clients, and out of that JLR and Tata Motors are the 2 top clients. Therefore, the predictability of revenues and profits is almost guaranteed. Having said that, let's move to point number 4, which is what is the biggest weakness or the risk that the company carries. So for that, page number 39 of their RHP document, you will see that 70% of their revenues are coming from automotive sector. Now this is a biggest risk, because if overall automotive sector slows down and this company is relying on the auto sector, this is going to severely impact their revenues and their profit margins. So that possibility exists, and we as an investor should acknowledge that as a big risk. But what are the probabilities of this risk playing out? So for that, if you go to their page number 173, you will see that there is a big regulatory push across the world for the EV sector, right? So for example, United States want all their vehicles, 50% of their vehicles to be sold in United States by 2030 to be EV. Likewise, India wants close to 30% of private cars, 70% of the commercial vehicles, 40% of the buses, 80% of the two-wheelers to be EV by 2030. So you will see that across the globe, countries are pushing for EV vehicles, and that is where primarily the growth is likely to come. But again, the possibility does exist about auto sector slowing down, therefore might severely impact the business, but probability is less. So far, if you're liking this analysis, simply hit the like button. Let me know in the comments. Thank you. It will motivate me to come up with such detailed analysis for absolutely zero cost. With that, let's move to point number 5, which is what is the competition landscape for this company and who are the competitors. So if you go to page number 207, you will see the company declares KPIT Technologies, L&T Technologies, Tata Elxsi as their main competitors. Also, IT service providers such as TCS, Wipro, etc. also has been named as the competition. But in my view, TCS Wipro, etc. are secondary competitors. They are not the main competitors. The main competitors are KPIT, L&T Technology Services, etc. So if we look at the page number 179, Tata Technologies 88% revenues coming from auto sector, but KPIT has 96% of their revenues coming from auto sector. This is their number one competition. L&T Services 33% only. Again, I would call it as the second competition. And then Tata Elxsi 46%. But please know that if you read the RHP very carefully, 46% is from the entire transport sector, not just the auto sector. So from that perspective, KPIT remains their top competition. Also, if you go to page number 176, you will clearly read the difference between Tata Elxsi, TCS and Tata Technologies is written simply there. In my view, TCS is a pure play software company. Tata Technologies is on the other spectrum. It is mainly a design company having some 20% of their revenues coming from software, but heavily concentrated on automotive. While TCS is not just about automotive, it is all about banking, it is all about logistics and so on. Tata Elxsi interestingly sits right in between, where it is also a design company as well as a software company. Let's now move to point number 6, which is financials, and we are going to compare Tata Technologies financials with KPIT Technologies as well, just so that we get some perspective. So page number 185, if we look at the revenue growth of this company, in 2022, it grew by 48% from a revenue perspective, and in 2023, the growth had come down to 25%. If I compare these numbers with the KPIT Technologies, you will see that in 2022, KPIT only grew by 20% versus 48% by Tata Technologies. And in 2023, it grew by 37%, which is more than the growth of Tata Technologies. So from a growth perspective, year ended 2023, KPIT has grown much better than or faster than the Tata Technologies. But let us also have a look at the profit margins growth as well. So from a profit margin perspective, if you go to page number 185, you will see that the profit margin percentage that you will see in 2021 was around 10% for Tata Technologies. It went up to 12% in 2022, and then it went up to 14% in 2023. Meaning that their profit margin is improving every year, which is a very, very good story. Versus if I look at the KPIT Technologies, you will see that their net income percentage that you will see is close to 11%, which is stagnated. So from that perspective, I like Tata Technologies better than the KPIT because of their improvement in the net profit margin percentage. Also, let us look at their balance sheet. So page number 280, you will see that in 2021, their total assets were close to 3,500 crores. It has gone up to 4,200 crores, and that has gone up to 5,200 crores in year ended 2023. So the total assets of the company has been growing consistently. Also, if you look at the property, plant and equipments, this is where the capex investment happens. That also has gone up considerably in the last 3 years. Goodwill has stayed constant throughout the last 3 years, which is good story from my perspective. So all in all, from assets perspective, I can't see anything funky going on in their balance sheet. And if you look at their non-current liabilities, which are like long-term borrowings, etc., you will see that that has not grown high in the last 2-3 years. So it used to be around 248 crores. It has gone to 242 crores. And then again 238 crores. So all in all, the long-term borrowings or the non-current liabilities, I must say, has not gone up, which is also a good news. Lastly, page number 283, cash position of this company. This company is a cash rich company. In 2021, it generated cash of 781 crores. In 2022, it was 768 crores. In 2023, it has come down to 382 crores. But overall, from a cash perspective, looks to me a cash rich company holding cash at the moment. Let's move to point number 7, that what is this IPO actually consist of. So page number 20 talks about that they are diluting 60 million shares roughly from promoters perspective. Tata Motors is going to dilute close to 46 million out of those 60 million equity shares. Alpha TC Holding is going to dilute 9 million roughly, and Tata Capital Growth Fund is going to dilute close to 4 million shares. The price band is between 475 to 500 per share, and at upper price band, the valuation of the company becomes 20,000 crore. So let's move to point number 8, which is valuation. So for which, let us go to page number 21 of their prospectus, and you will see that the earning per share has been close to 15.38 if I look at the year ended 2023. And if I take the upper band, which is 500 rupees, so 500 rupees divided by earning per share comes to be 32 times of PE. If I compare this 32 times of PE with the KPIT, you will see that KPIT's PE is close to 105. So from that perspective, Tata Technologies price band is actually reasonable. Also, if we compare it with likes of Tata Elxsi's PE right now is 70, L&T Technology Services is 40. So from peers perspective, 32 PE is not too much. I think it is very, very reasonably placed. But if we look at the second valuation parameter, which is from a net worth perspective, so if we look at the net worth of the company that has been stated as of 2023 September is close to 2,853 crores, and the valuation at upper price is coming at 20,000 crores. So almost this is 7 times of the net worth of the company that you will pay if you invest at the upper band. To me, it is not huge because companies like Mamaearth that I talked about in my previous videos were coming at net worth valuation of like 20 times. So from that perspective, I think it is very, very reasonably placed. Then if you look at what is the net asset value per share, so for that, if you go to page number 21, you will see that their net asset value per share is close to 70 rupees here at the end of September 2023. And if you look at the higher band, upper band of 500 rupees, it is close to 7 times. So again, you are paying 7 times more than the actual net asset value per share. But again, in my view, that is very, very reasonable. So from a valuation perspective, my simple analysis says that it is very, very reasonably valued and not overvalued at all. Let me know in the comments from the 3 factors that I talked about. Do you think it is overvalued or undervalued? Let me know in the comments, please. My final point that I want to talk about is actually summarizing this. From my perspective, I think the company is profitable. Company is a growing company. We have seen that the revenues and profits have been growing consistently. And also the future predictability of the revenue and profit is very high because of the concentration of the clients, the top 5 clients that we talked about. Company seems to be cash rich company. There is nothing funky in the balance sheet of the company that at least I could find. The key risk of the company remains that it is purely dependent on the automotive sector, and if tomorrow automotive sector slows down, then the company is going to see some slowdown. From a valuation perspective, if you look at that, valuation is very, very reasonable. From a competition perspective, the company has got that business mode, that particular competency in the automotive sector, and I think the company is going to continue to grow. All in all, because of the reasonable valuation and the overall predictability in the revenue and profit growth, I think I am going to apply for this IPO. Please do not take this as a recommendation because I have simply done the analysis for you to do your research and take your individual decisions, because ultimately it is your money, your decision. Also, a quick announcement. I've also started my Hindi YouTube channel. You will find the link in the description. You can also go and watch those videos, and if you like them, you can consider subscribing. With that, I hope you enjoyed this video. I will see you in my next video. Until then, keep rocking.